How do you invest your first $500 to get rich as a teenager? Investing is not just for people with a large amount of money, and it doesn't have to be complicated. You can get respectable returns on even the tiny amount of money you start with the right approach. This video will give you step-by-step instructions and teach you everything you need to know about investing your first $500 as a teenager. Investing as a teenager gives you a significant financial advantage as you get older. Not only do you have more time to accumulate funds, but you can benefit from compound interest and youth tax breaks. Time gives teenagers a considerable advantage over those who start their investment journey later in life. Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it, wins it. He who doesn't, pays it." What makes compounding such a powerful force is its impact over time. The longer you let an investment accumulate, the more valuable it can become. Teenagers can let the wonders of compounding work to their advantage for a more extended period, which could make them richer when they retire. When you start investing regularly at a young age, you give your investments more time to grow through compound interest, which is one of the best benefits teens can get for their investments. That's why most personal finance coaches recommend investing from a young age, to give your investments more time to grow until you retire. So, where should you invest your money for maximum return? That is exactly what we'll find out, but before we dive into the details, do me a favor, hit that like button to get these videos out to a broader audience. Also, subscribe to the channel to receive notifications when we post a new video. Now that that's out of the way, let's get to these tips.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.
Number 1. So, while you're in your teens, the first thing you should do is invest in yourself. This can be very profitable compared to your returns on stocks or any other investment. In general, your dreams and aspirations change with age. You may want to be a singer at 15, but by the time you're 25, you may want to be a businessman. But this should not stop you from learning new skills at a young age. Any skills you learn will surely help you in your future. Also, the skills you acquire don't have to be expensive. In the internet age, you can learn almost anything for free. So go ahead and start learning. Let's move on to the second thing you can invest in. This is the stock market. We know that as a teenager, you won't make much money, but still, you can start your investment journey by buying a small number of shares and fractional shares available in most brokers. You can even buy them with a minimal amount. Even a minimal investment of $500 will be enough for you. But if you're under the age of 18, you cannot open your brokerage account to buy shares. To get around this, you can open a custodial account, a specialized brokerage account opened and managed by your guardian or parent on your behalf. You will take ownership and control of the brokerage account management once you reach the legal age. But choosing a stock is not as easy as you think. It takes a lot of time and effort, but if you are confident enough to look for and buy good companies with a long-term perspective, go ahead and try. One of the problems we see with teenagers is that they want to get rich quick. They want to have everything right away, so they often get into intraday and swing trading to make a quick buck. But believe me, if you go into trading with this mindset, you will be sure to stay poor. Anything that has a short-term perspective will stay short-term. We're not saying that you cannot make money in trading, but statistics show that most of them do not. So your chances of making money by investing for the long term are higher than by trading for a short term. So if you want to play it safe and still get a reasonable return on your investment, you can invest in low-cost index funds or ETFs. Low-cost index funds diversify your investments across many companies that make up to a specific index. For example, An index fund that aims to track the returns of the S&P 500 index will invest your money in the stocks of companies in the S&P 500 index, reducing the risk of your investment by spreading it across 500 different companies. The S&P 500 index has historically generated an average annualized return of 10%, making it an ideal long-term investment option for young investors and teenagers. It's also a long-term play for the money you invest. Your teenage years will turn into a significant nest egg in your 30s, 40s, and 50s. Let's move on to our third option, real estate investment trusts, or REITs. REITs are companies that own, finance, and manage income-producing real estate. Most REITs are publicly traded on stock exchanges and are traded like stocks. To gain exposure to real estate and diversification, you, as a teenager, can consider investing in a real estate investment company with your deposit brokerage account. Unlike real estate investing, REITs are very liquid. They can be traded on the stock exchanges as an investor yourself. You can also benefit from the dividend income they pay. The fourth point is to open a high-yield savings account. Although savings accounts are not as exciting and usually not as lucrative as other types of investments, there are advantages to opening one. Suppose you are new to managing your money. In that case, savings accounts are a helpful way to start enjoying the benefits of compound interest and not spending money. Plus, once you've opened a high-yield savings account, you can simply leave the money alone and start to make a profit. With a high-yield savings account, you can have joint ownership in your teens instead of a custodial account where you can't access the funds until you reach the age of majority. Rather than a standard savings account, a high-yield savings account will earn you more money. The average interest rate on a savings account is around 3% APY. Some high-yield savings accounts can almost double that rate or go much higher when interest rates aren't bottoming out as they have been in recent years. The longer you keep money, including interest earned, in the account, the more money you make while you sleep. The fifth point we discuss is to avoid accumulating student debt. Suppose you can keep your student loans at a manageable level. In that case, you can secure your financial future and avoid falling into the debt trap. Reducing every dollar of your student loan is like investing that dollar. Many teenagers don't understand the importance of staying away from student loans and overburdening themselves with overwhelming debt. They pay high interest on the outstanding balance. So, if you can, we strongly recommend that you stay away from them. And the last one would be to start a small business. By opening a small shop, teenagers can start a small business, such as selling t-shirts or printed products. The idea is to learn the basics of business and help them learn about the process and different steps, from buying supplies to adding value to marketing and selling products for profit. You can choose to reinvest the profits in the business to make it grow, or withdraw them to fund your education. You should start small. Even a $500 investment is sufficient. The point is that even if you lose your investment, it doesn't ruin you. If you run out of funds, you can partner with a friend and share your funds more than the profits. The experience of the business will pay off in your life. Once you can generate a reasonable profit on your time and investment, you can continually expand it to generate a higher and more sustainable profit. Most of the great businesses that we see today started small and gradually grew to success. So, to conclude, investing early always pays off in the form of a higher compounding effect and more money at retirement. Even with a modest rate of return, if the habit of saving and investing is formed in teenagers at a young age, they will become financially literate and make intelligent decisions, leading to financial independence. The fact that you are watching this video as a teenager gives you a head start on your personal finance journey. And by following the methods we've mentioned in this video, you, as a young investor, can achieve financial independence sooner than the rest of us. And that is it, folks. I hope this video has provided you with some knowledge. If you have any questions or suggestions, post them in the comment section below. If you like this video, give us a thumbs up because it motivates us to create new videos. Also, subscribe to the channel to receive notifications when posting a new video. As always, thanks for watching.